Hi guys, welcome to As Simple as Possible. Today we're going to start with revision of chapter 1, which is Strategic Management Accounting. The first point is business strategy is not the main focus of advanced performance management. Rather, improvement of organizational performance is the main focus of advanced performance management. Second, there are 3 tiers of information at different management levels for planning, controlling, and decision making, which is number 1, strategic planning, number 2, management control, number 3, operational control. So this is an important point. Third point, potential conflict between strategic and operational decisions. Number 1, unrealistic plans. Sometimes the strategic decisions are made in such a way that they involve unrealistic plans, which is difficult for operational level to achieve. So that is why this is a potential conflict. Second is poor communication. If there is a lack of communication between the strategic and operational level, so there will be a conflict between the two. And third is inadequate performance management, which means that the word is measurement. So if we do not measure the performance well, we will not be able to actually realize whether we have achieved the targets, and then it creates a potential conflict. Number 4, meaning of performance management system. Performance management system is a system in an organization by which the performance of that organization is measured, controlled, and improved. Next point, strategic management accounting. The aim is to provide information for strategic planning and controlling. Now, what type of information is involved here? So, that information which is provided by strategic management accounting for strategic planning and control must have 4 characteristics. It must be linked to corporation's strategy. It must be forward looking. It must monitor changes to the environment, and it must include financial and non financial information. So, these are the 4 characteristics that the information provided by strategic management accounting for strategic planning and controlling should have. The next point is point number 6, which is that traditionally only internal information was used or concentrated upon. But today, management accounting is using information from internal, external, and non-financial sources. Next is hierarchy of performance measures. This is a triangle which shows the hierarchy. We have three levels: strategy, which is the smallest you can see in the triangle. Second is the tactics. And third, the biggest one, is operations. So this is the hierarchy of performance measures in an organization. So strategy includes performance measures that must be forward looking, externally focused, non financial. These are some characteristics of the performance measures. Tactics must include medium term budget forecasts and resources allocation. Operations must include day to day tasks. They are internal, detailed, and include transaction level. So this is a summary of the hierarchy of performance measures. Number 8. We must remember that tactical information is short time period, which is 1 year, but operational information includes day to day function. Ninth point, performance measurement and performance management. We must know that performance measurement is an essential part of performance management. So performance management is a wider or bigger one here, and it includes performance measurement. Now, performance measurement includes two things. Performance management includes two things. First, effective control action. Second, improvement of business processes. Next point is point number 10. Benchmarking. There are two sources of data for benchmarking. internal and external. External includes industry and functional data. Benchmarking is an example of application of strategic management accounting. Now, what is benchmarking? We all know that in an industry, there can be different best practices. A must be doing something good, B must be doing something good. So, when we combine the good of everybody around us, we can create a process which is best and improves our current performance, because we are including the industry best practices. This is what is benchmarking. So, benchmarking provides performance measures that are strategically important. So, next point is 11th point, which includes types of benchmarking. First is internal, second is external, which includes three types. So, internal includes one unit or function with another in the same organization. So remember, internal is about the same organization. We are just comparing one function to the other or one unit to the other. But in external, we have three types. We are comparing with the industry and with our own competitor of the same industry. Then we are comparing with the industry but with a non-competitor person who is not our competitor. Third is not from within our industry. We are selecting on the basis of who is performing that function the best, even though he does not belong from our industry. So that way we will be able to take good inputs from all places. So these are the types of benchmarking that have been included in the chapter. The next point, the 12th point, is steps of benchmarking. There are total 7 steps. The first step is to set objectives and determine the areas to benchmark. So, setting objectives and areas. Second is establishing key performance measures or performance drivers which will be used for benchmarking exercise. Next is selecting the organization to compare performance. Next is measuring own and others' performance using measures that we had defined in step 2. Next step is compare performance and identify gaps between the performance of your own organization and those of the other comparator organizations. So you will compare the performance between the two and identify the gaps. Next step is design and implement an improvement program to close the performance gaps identified. So now you'll try to close the gaps. The last step is monitoring improvements because it is a continuous process. So benchmarking is a continuous process. So we were on the 12th point. Now we'll go to 13th point, which is SWOT analysis. S stands for strength, W stands for weakness, O stands for opportunities, and T stands for threat. So, the important topic here is advantages of SWOT analysis in performance management process. First advantage is that it helps in identifying weaknesses and threats. Second, identifying opportunities and strengths. Third point is maintaining the strengths that we had identified. Fourth is identifying the critical success factors. Next is determining information needs. And the last advantage of SWOT analysis is evaluation of targets. We see here that they are realistic and achievable. So these are the advantages of SWOT analysis. Next is 14th point. Porter's 5 forces. So here is a chart. Porter has said that the stronger the competitive forces, lower are the industry profits. So he has given the 5 forces: competition, and rivalry. So these are the 5 forces. This is 1, this is 2, this is 3, 4, and 5. This diagram would help you to visualize these factors so you don't forget the factors. So competition and rivalry is the first factor, and the competition is between buyers, because the buyers have a bargaining power. So that is a force. Second is the bargaining power of sellers or suppliers. Next is competition between new entrants. New entrants also come as a competition for us. And then substitutes. If there are other substitutes available for our product or service, so it is a competition factor for us. So these are the 5 forces of Porter. The next important topic here is potential issues with Porter's 5 forces model. It concentrates on industry profitability and not on individual profitability. Second is that it becomes sometimes difficult to identify industry, because sometimes we fall in 2 or 3 different industries. So it is difficult to identify the industry. We are done with this topic. Now we'll move on to the 15th point, which is BCG matrix. BCG matrix stands for Boston Consulting Group matrix. It involves 2 factors: strength of the factors and their position in market, and the market's attractiveness for growth. So these are the 2 factors. This matrix is used for product and service level and second corporate level. Now we'll draw the matrix. High, low, high, low. This is relative market share, and this is market growth. First stars, next question marks, third is cash cow, and fourth is dogs. So when you have high market growth and your market share is also very high, you are a rising star. But in this case, you will require more cash and the long term returns are high. So right now you need cash. Second is question mark. Question mark also requires a lot of expenditure. They are in a market that is growing, but their market share is low. So in that case, they also need money. Both are financed by cash cows. So both of them are financed by cash cows. Cash cows have a high share in a market that is growing slowly. There is relatively low market growth. So they are in a mature market and they have more cash. So their requirement for cash is less. So that can be used for stars and question marks. Dogs are generally the units that we are thinking of discarding because they have a low share in the market that has a low growth. So they are like the war horses. They are allowed to die if the trends do not reverse. Next point is connected with this topic itself, which is uses of BCG analysis. Internal balance. It helps to assess trends. It helps to evaluate competitors. It helps to evaluate risk, which involves sensitivity analysis. So these are the 4 uses of BCG analysis. Next topic is point number 16, Porter's generic strategies. Porter says that there are 3 generic strategies: cost leadership, differentiation, and the third one is focus. Focus is used when there is a lack of resources or we want to minimize costs. That is our main focus. So it's like a combination of the other two. In cost leadership, we generally do financial control, reducing waste, maximizing efficiency, economies of scale, learning curve effect, Kaizen costing, continuous improvement, benchmarking, impact on value chain. In differentiation, we monitor the cost, measure the performance, and basically it is used in non-financial measures. Next topic is balanced scorecard, which is a 17th point. The key feature of balanced scorecard is that it links strategic elements to operational elements. Strategic elements include mission objectives and operational elements include target key performance indicators. So it links the strategic elements to operational elements and gives us a performance measure from a range of perspectives. So balanced scorecard is all about different perspectives. It might be financial perspective, customer perspective, non-financial perspective, any other perspective. The next topic is point number 18, external environment. We know what is external environment and what is macro environment. So external environment generally deals with all the macro environment factors. Here we are basically talking about pest. Pest is political environment, which includes tax, regulations; economic environment, which includes inflation, interest rates; social environment, which includes culture, taste; and technological environment, we know what is technology. So it includes all these four factors. The last point is point number 19, burns and scapins. Burns and scapins have told us about the changing role of management accountant. How has the role of management accountant changed? Traditionally, management accountants were different from the operational level, but today management accountants are connected with the operational level because they are involved in technology, competition, the management structure. So this is all about the changing role of management, and we end the revision of chapter 1 here. You can continuously see the video and revise the topics again and again. The questions here don't come direct, so we have to use our analytical mind along with these points. So this is a short and fast revision of this chapter. I hope you like this video. Please do comment, share and subscribe the video, and of course thanks for watching.